Hello everybody, Bill Moore here. Today we're going to take a look at some trade ideas based on relative value. Let me tell you where we are right at the moment. I've created 11 baskets and they are based on the components of the SPDR sector ETFs. So these are the 11 baskets. I've already run the analysis with those 11 baskets and I have set the standards very high. I've got 0.8 for correlation, 0.8 for RW coefficient, 3 times successful winners in the past, so basically well behaved, an expectation value of at least 5% in 30 days, etc. So I've set these things at a very high standard. Now, there's many thousands of pairs that are in that analysis, but with that set as filters, it comes down to these 7. So these 7 are potentials. Doesn't mean that necessarily there's something good, but I want to show you one to start with, and then I'm going to show you a couple of others. But let's start with this one, because even though all of those criteria look good, the fact is this is not a good looking chart. That's not what we're looking for, something that basically had a very strong down and then a very strong up. We're looking for something that looks more like a sine wave and has a very flat mean, which is the blue line here. So let's back up and take a look at what else is there. So I found a couple, and I want to take a look at this one first. Let's take a look at this one first. And you can see here that this is more like the picture we're talking about. You see that kind of sine wave look, and the blue line is much flatter than the previous one, right? It's straight across. And then we come and take a look at our quick and dirty back test. All this back test does is put on a trade when the pair hits the orange line, right, which is the second standard deviation, and it closes it. So it puts on a short when it's up here, it puts on a long when it's down here, and it closes it when it hits the mean. Okay, so when it hits the mean is in this case less than that, then that's a profitable trade. And in this case, if the mean is greater than that, then it's also a profitable trade. It's been outside of the second standard deviation 8 times and returned profitably to the mean every time. So that's indicative of that picture. So it's a very nice looking pair here. So I've made it already. Let's look at, I've already put it over here on our observe page. It's this one here. The only thing that is, I can say bothering at all, but something I want to look at is that the most recent day was a pretty strong move up, right? A strong move further away from the mean. And I do want to investigate that. If you take a look down here, this is our trend indicator. And the trend indicator, I like, without going into the details of it, but the trend indicator tells you basically which direction overall it's going. And I don't like to put on these trades until the trend indicator, gets in the right direction. And obviously this is going to be a short, so I would like this to be heading down. It's not yet, so I'm probably going to watch this one. But let's go take a look at what might have caused this one. So let's go over here. Let's see. We're going to take a look at Intuit first, see if there's any news that might matter here. Doesn't look like it. So let's come over and look at CRM is Salesforce, by the way, is the company's Salesforce. Great software. That looks like we have to put in New York Stock Exchange here, or else it doesn't know what to do. Then let's check the news on those guys. Okay, here's the issue. Salesforce had earnings yesterday, and they dropped based on, it says here, weak guidance. Obviously, in this situation, where our product here is Intuit minus 1.46 of CRM, so this thing going down is going to cause this thing to go up. So I'm going to watch it. I like this one, but I'm not going to say this is one to trade today, because I'm going to wait for this piece to start going the other direction. Let's go back over here. I found another one though that really looked very nice. This is COF and DFS. You can see here the sine motion, the sine wave kind of motion again. It's not quite as flat as the other one. So it doesn't have quite as spectacular of a look as the other one. The good news on this one though is that you can see right over here, we're going to look at it in more detail in a second, but you can see that the trend has already turned around. It's already starting back the other way. So this one is more in a position that I would like to trade. It's crossed outside the second standard deviation 6 times, and it says it's had a profitable return to the mean 5, which is still good, but the reason it's 5 is because the most recent one is still open. So it has actually profitably returned to the mean every time so far, and it just has the current one is still in an open position here. So let's go take a look at the hitting probabilities. The hitting probabilities gives us an idea of how long we think it's going to take to come back to the mean. Now, when I take a look at this is using the Ornstein-Uhlenbeck model here. We make a model and we check a lot of different things for the simulation. But the first thing I look at is this, because this is showing, hey, when the price of this pair is down, the price changes are up. And when the price of this pair is up, the price changes are down. So that's, what does that mean? That means we have created mean reversion, right? These are synthetic symbols that we're creating, and the whole purpose of creating these synthetic symbols, in addition to removing a whole lot of risk, is to create mean reversion, right? Because we can trade mean reversion. So let's go ahead and run the simulation. So once we have the model, we run a Monte Carlo simulation with 1,000. I've got it set to run it 1,000 times, and we can take a look here. And it says that, okay, because it's at minus 8.19 right now, and this is a long trade, so we want to know if we're going to be above it. This says that in 30 days, we're going to be above it almost 92% of the time. Now, that does mean that, 8.5% of the time, we're going to be down below that. So it's not a gimme, but it is a 10 out of 11 kind of shot, according to the model. So I think that's good enough for me. Let's take a quick look over here. So I'm going to suggest that we take a hard look. I'm going to be taking a hard look at it because it looks like it's basically ready because the trend is already right. I'm going to be talking about buying COF, and for every share of COF that I buy, I'm going to be selling 1.28 of DFS. Buy COF and sell 1.28 shares of DFS. Good luck with your trading.